I touched that microphone about 15 seconds ago. All right, I'm about to go live on Instagram.
Yo, 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 what is good, YouTube fam?
What's popping? It's your boy David.
And your boy Jalen.
Trying to get Instagram in on this thing real quick. Instagram not letting us be great. Why is it doing like a story?
The hell is a stream? Damn, this shit's so damn late. Yo, 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 what's good? What's good? What's good? Hey, y'all, once again, y'all bear with us. This is our first stream.
All right, let's try this again. What's good, Instagram family? How y'all living? Your boy David, 1/4 of the Black Wolf Renaissance. Checking out my brother Jalen. Yo, we are also live on YouTube right now. So if you are a follower of us on YouTube, y'all definitely tap in. What's good, family? How y'all doing? Welcome. Y'all file in. How everybody doing? How y'all living? Your boy David and my brother Jalen. We here.
What's good, y'all? We trying this YouTube live shit, y'all.
Yeah,
I ain't gonna lie to y'all.
Yeah, we trying this YouTube live out right now, everybody. So like, bear with us. We about to get into money management. We're gonna talk about some things with y'all. We got a couple of good things planned for y'all.
Yeah.
But as always, y'all know how we kick these lives off for everybody on YouTube and on Instagram. Y'all let us know where y'all checking in from. Let us know how y'all living this good day. We'd love to hear where y'all from. So y'all let us know where y'all from right now.
Yeah, y'all let us know where y'all tapping.
Okay, I see Haiti in the building. Okay,
shout out to Haiti
already.
Y'all
make sure y'all tap in on YouTube as well. We ain't gonna be on live on Instagram this entire time. So if y'all enjoy the things that we're gonna be talking about today, we're gonna make sure y'all get over on our YouTube channel, subscribe over there. But just to give y'all an idea what we're gonna be talking about, y'all Memphis, that's Canada, okay, Atlanta, yeah, Baltimore, be more in the building. We're gonna be talking about money management, kind of coming into the new year.
Yeah.
Things that we've been working on ourselves that we've been really focused on is setting real good goals and really setting yourself up for success in 2021 so you can knock everything out the park. That's one thing we really been focused on. So we want to talk about SMART goals today, how you can set some goals that you can really achieve and crush. And then we also want to get into investing. We get a question a lot from people about like when should they start investing or like how should they invest. So we want to get into like just some rules before you should start investing. Should you be investing or not? And then get into a couple different investment vehicles that you could take advantage of. Okay, I see Dallas and DC in the building. DC, Dallas, Trinidad and Tobago. Shout out.
We got 3 people on YouTube. Once again, we don't know too much about this YouTube shit, man. Y'all. So y'all definitely bear with us on this.
Hey, I see the boot in the building. What's up?
What's up? And also for anybody who's new to our platform, because I know we haven't been on here in a while. I'm Jalen. I'm 1/4 of the Black Earth Renaissance podcast.
And I'm David.
And yeah, this is our merch. But this is our platform. We created this 2 years ago. 4 friends who came together just with one common goal, just to share knowledge that wasn't being talked about in our community. We really wanted to educate all of our really just whoever we could get to listen, and really just change the narrative around our community. There's this one headline that said, in 2053, the net worth of the Black family would be zero. So we had to do something about that. And this is what kind of came out of that need for this. We wanted to highlight different entrepreneurs in our community, in our space, people who really just doing something, people who are really making a difference within the community. And we really wanted to just take charge of the media that's being portrayed by us. A lot of times we see everything negative, you got a lot of the shade rooms, you got spiritual
Mm-hmm.
words, and like it's nothing wrong with those pages.
But we not here to spread drama mess. We trying to change the narrative around our community.
Yeah.
One big thing we set out to do with this is change the conversations that we're having. We want to normalize conversations about wealth building. That's really what our whole platform is about, and that's really what we're gonna be talking to you guys about tonight. So real quick before we hop into everything, y'all make sure y'all subscribe to our YouTube channel. I seen somebody ask if we on YouTube. Yeah, we on YouTube right now. We on YouTube Live. Yeah, definitely tap in. We don't own Instagram, we don't own YouTube, but the YouTube content, it gets to live forever. So we trying to try this thing out, let people be able to tap into these things a little easier. The Instagram lives is cool or whatever. Everybody always asks us, are you gonna say this live? But it's so much easier to find on YouTube.
Yeah.
So definitely y'all tap in. Make sure y'all subscribe to our YouTube channel. The link is in our bio. Now, you got anything else you want to get off?
Nah, man, that's pretty much everything I had for just starting off.
All right. Well, now let's get into what we actually want to talk about tonight, guys. So we really want to come in here and talk to y'all about like setting achievable goals is one of the topics, and investing. We want to talk about investing as well, but we're gonna start off with this goals thing.
Before you start, I see Tiffany X is the name the same. Yes, across all platforms, Black Wealth Renaissance. There is one thing I want to say, man, before we get started.
Shout out to my brother Matt.
We got some motherfuckers out here who is impersonating us,
Mm-hmm.
imposters, y'all. They out here trying to
asking for your credit card information.
Yeah, they gonna go follow you. Hey, I ain't gonna lie, y'all. That's one thing about us. We don't just be following anybody. I ain't gonna lie to y'all. We believe heavy in curating our timeline. There's nothing against y'all, but they're gonna come follow you and they're gonna send you a DM talking about you just won like $5,000 or whatever.
That's
y'all,
not activities we partake in.
Please report them. Please.
Yeah, please make sure y'all don't fall victim to these people, man. They out here really trying to take advantage of people. Like we said, we trying to really change the narrative and help our people. And we don't want people getting taken advantage of because of that. So y'all make sure y'all staying wise to that. Let's get into these goals.
Yeah.
So 2021 just hit. Everybody they on their new year, new me energy. You got a lot of newfound energy. Is the beginning of the year.
Everybody want
fresh possibilities. We got all these. It's a new chapter in the year. We got 2020. We got past that shit. Everybody was, kind of tired of that. Everybody was hoping that 2020 was going to go a little bit better, but it was a crazy ass year. And we thinking 2021 going to be better. But with that, like, we really want to make sure that people are not like shooting themselves in the foot when it comes to actually planning and plotting out with 2021.
Mm-hmm.
So we want to talk to you guys about setting goals that are like really achievable. It's a concept many of you may be familiar with. Oh, somebody asked about the hoodies. I see that. The hoodies gonna be available soon. But
that's my girl. She be kicking game on Twitter too. Shout out Six Figure Athlete.
Facts. But yeah, like setting SMART goals. It's a concept some of you may have heard about. It's a concept some of you may not have heard about. But just real quick, what that stands for is setting specific, measurable, attainable, relevant, and time-bound goals. So, like,
hold on, give one more time. What is a SMART goal?
So look, we're gonna lay it out one more again. Specific. So it has to be like something you can define easily. Measurable. Something that you can actually put in the number. Something you can track. Attainable. It has to be realistic. It can't be some that you just like. If you made $100 doing something last year, you're not gonna make $1 million out of nowhere. Like, keep it attainable.
Keep it real with yourself.
Yeah, keep it funky with yourself. Don't fake the funk. And relevant. So if you are a notary, you don't want to say that I'm gonna make $1 million in real estate. Like, what are you talking about? That's not relevant to what you do. Keep it in your lane. Stay in your lane. And time bound. I think that's one of the biggest things that a lot of people miss. We set goals for 2021. Like it's a quote. People often overestimate what we can do in a year and underestimate what we can do in 10 years. So like just thinking about setting goals that like are within this framework so that you can really be setting yourself up to achieve the things that you want to be doing in life. Like, overall, like you have a 10-year plan and making sure that everything that you focusing on within that is aligning with that. So real quick, I want to give an example of like a SMART goal. So say like you got a side hustle, right? You want to increase the income month over month from your side hustle by 30% by January 31st. So say like last month in December, you made $1,000. You want to see a 30% increase by January 31st. With setting those types of goals like that, now you can really give yourself an opportunity to strategize.
Mm-hmm.
Now you can really look at, okay, what can I do and how can I track this to make sure that I am actually taking a step toward my goal and making it something that you can actually touch. But yeah, that's one of the biggest things like with SMART goals.
Nah, I was letting you go, my brother. Like you was on the roll. But just setting those goals that you can actually obtain is really, really powerful. One, because it gives you that sense that, oh, I can actually do this.
Mm-hmm.
You're not setting yourself up for failure. A lot of the times we set these astronomical goals,
Mm-hmm.
and it's great to be a dreamer and to say, I'm going to do this. But like he's saying, how are we going to make sure that this is going to happen? Give yourself something realistic that you can actually reach and you can actually crush, because what it's going to do is it's going to give you more confidence once you do obtain that goal, and it's going to give you momentum. Now you can build off of this. Oh, I was able to hit this one. Let me see, maybe I hit the 30. Let me see if I can maybe do 35 next month. Let me see if I can do 40 the month after that. So now it's allowing you to just slowly build up on that. And it's kind of like taking those baby steps. But you also don't have to set small, like really minuscule goals. Like you can have a goal, something that's going to be challenging. Don't make it to where it's just too easy. Make it a challenge for yourself, but it's something that you know that you can obtain.
Yeah. And like I just kind of want to speak to more with that mentality, because I know whenever we talk about stuff like this, it's a lot of people that be like, nah, fuck that. We gonna 10x it. We gonna 10x it. You heard me? Like we can do it like that. But
you can.
But the thing is that we want people to take away from this conversation is that like it feels so much better to set goals and crush them motherfuckers than it does whenever you set these astronomical goals
and you don't reach them.
You fall short. And like I know the thought process behind 10xing is that like, well, if I set a goal that's above and beyond what I think is reasonable, it's going to make me work above and beyond. But that could be a double-edged sword in a lot of cases. You can set this big ass goal, and then whenever you start realizing that, dang, like I may not reach this. Like by the time June, July hit, and you start realizing, like, dang, like I only made 10K last year doing this, and I set my goal to make a meal, and now it's looking like I might only make
I'm not
30,
even gonna
40.
make I'm not even gonna make six figures in this.
Like I'm not even gonna make six. Now you feeling like you less than, like you can't really accomplish these things, and now you might actually start retracting instead of going harder with the things you want to do. So we really want y'all to like think about that coming into this year, making sure that you really setting these types of goals. And it doesn't always have to just be like with your finances. Like it could be with anything. Like you want to work out.
It could be a person. It could be anything. Relationship goals, personal goals, business goals, physical goals. Like do something to where you can actually obtain it. Even like with push-ups. If you know you can't do 50 push-ups right now, why would you say, man, I'm about to do 100 push-ups tonight? I mean, you can really sit there and you could try it, but how about giving yourself, okay, if I can't do 50, let me get consistent to where I can do 35 straight, like without stopping. Now you're able to start building up on that, and your maximum goal could be that 50. Once you get to 50, then you bump it up to that 100. Like it doesn't have to always just be them crazy goals. That's pretty much the message of this story tonight. Like just setting these goals, and we're talking to you about this because this is something that we're currently working on. We've been working on our goals and just really 2021 for the past month and a half. Honestly, we've been just really adamant about it and really just trying to plan
Map out.
2021 for the best of our ability to where we can really just go hard at it. So this is something that we're currently working on. So we wanted to just share with you guys so y'all can be successful for this year coming up.
For sure. And I just kind of even want to give them like a further peek under the hood as to why we even want to have this conversation with y'all, because in 2020 with Black Wealth Renaissance, I mean, a lot of y'all see the work that we put out, but y'all don't see the work that we put in ourselves. And a lot of that work with this extreme fast growth, a lot of the times with us, we were playing off our back foot, like my
Yeah.
brother said. Like we wasn't thinking proactively with everything. We were kind of just reacting and making moves as it's going. So like even with that, like we don't want y'all to sit here and like listen to us have this conversation and think that this is not something that we working on ourselves. We just want to open this conversation up to make sure that we all thinking on the same page within this work that we trying to do as a community. Um, but I see somebody. I'm glad you
Yeah.
asked. Somebody just asked if we have any book recommendations. So
We actually had,
when
yeah.
it comes to setting these goals and money management in general, that's part of what we wanted to talk to y'all about today. Is that we have a book on this, guys. I'm not sure if all y'all are familiar or not. If you aren't, our book is called Managing Money Like the 1%. It
Yeah.
is a step-by-step guide to helping you change your relationship with money and explaining how investing works. So in this book, we walk you through just like the doctor. It's like a 6-step process
Yeah.
where we're gonna walk you through first off how you can change your relationship with money, and then after we walk you through that, we're going to show you the different types of investments you can get into along with their risk, so you know what you're getting into before you get into it. And that's something that we're going to discuss on this live a little bit later as well. So y'all stay tuned in for that. But if y'all interested in our book, Manage Your Money Like the 1%, it is available in ebook and paperback format.
And on Kindle.
And it's on Kindle. So you can get it on Amazon. You can get it
From
from
Walmart.
Walmart, Barnes and
Target.
Noble. It's all over the place. But the link to that is in our bio. So if y'all want to tap in with that, click that. Y'all go get Manage Your Money Like the 1%. And yeah, y'all keep rocking with us.
Yeah. Also, just other books if you want to just kind of shift your mindset and things with that. Some other great recommendations. Think and Grow Rich by Napoleon Hill.
That's one of the favorites.
Outwitting the Devil, once again,
Yes.
Napoleon Hill.
Money Master the Game, Tony Robbins.
Money Master the Game by Tony Robbins.
Yeah.
I've finished that one last month. What is
Currently
another?
reading.
Huh?
Richest Man in Babylon.
Yeah,
It's always
Richest
one of
Man
my
in Babylon is another
especially
great
if
one.
you're new to this space, you're new to this. I think it really helps bake in some of those personal finance principles for you through a story. So that's another really good one. I'm trying to think about another one I really enjoyed. Millionaire Next Door was another good one.
I gotta go to my handy dandy Audible app.
And that's just all on the personal finance tip. Now we got different recommendations when it comes to business,
different things.
Yeah. So I kind of want to go into our next topic now. Can we post a list of books on our page? Yeah, we could do that.
Yeah, we could do that.
Yeah, Rich Dad Poor Dad as a beginning. A good beginning. So the
Ham 234. Thank you. Appreciate that too, bro. Saying that the podcast is fire. It's really just a sample that we got. Somebody kind of like chopped it up for us. But yeah. And
Oh, you talking about books by Black authors? We got some more books with Black authors that you could get too. Our girl B, she dropped the Financial Starter Kit.
Yeah,
that's also available on Amazon along with
Aisha,
Multi-Millions by
Aisha
Aisha Sheldon.
Sheldon,
You actually can
Multi-Millions.
purchase all 3 of our books
As a
together
bundle.
as a bundle.
It's all by a Black publishing
Yeah.
company too. Like we really talk, we really live in what we talking
Yeah,
about.
we
Like,
all about this group economics game. That's really what we here for. That's what we all about. So we work together with a Black publisher. You can buy a bundle of Black personal finance good books to really get yourself started as well, if that's something that you're interested in. It's all available on Amazon.
yeah.
But yeah, like I was saying, I kind of want to get into the next topic that we have. This is something that we get asked often, and I just want to talk about this because it's important. And that is, should you be investing right now? A lot of people DM us about asking us investing, asking us what to invest in, just tell me what to buy, that type of shit. And a lot of people don't even ask that question beforehand. Like, should you even be investing right now? Because one thing we always talk about is that personal finance is personal. And with that being said, that means that each person's situation is different. There's no cookie cutter road to wealth. Everybody is in a different situation. Different vehicles apply to different people. Different things apply to different people. So you really need to understand first and foremost
your situation.
Like, and that should start by asking yourself a few questions. Like, should you even be investing right now? And I got a few questions that like I want you to ask yourself before you start investing. The first and foremost question, number one, do you have an emergency fund and savings? That's a big one.
Mm.
There is the statistic. I'm not sure. I mean, you've seen the pandemic just hit. It's a lot of people. They currently in forbearance with their rent. They got a lot of people that's like they got caught.
Behind.
They got caught slipping because they did not have savings.
Mm-hmm.
So like rule number one, and we discussed this in our book, Managing Money Like the 1%. Before you try to do anything else, you need to make sure that you have a strong foundation by having some cash reserves. And that is like, first, you just need that 1,000 saved up. And we're gonna have a challenge. We're gonna launch a challenge pretty soon, helping people start saving. But you need to have at the very least $1,000 saved up. Like, I think that's so crazy to me, bro. Cause it's like, don't make me lie to y'all on the statistic, but I want to say the number was
It's like
close
73, 74%.
not 1,000. I think it was a little lower than that. The number was around 50% for like people who don't have $1,000 saved.
$200.
Yeah. Like, and the one Jalen was referring to was if most people, I think it's like 70 something, 75% of people couldn't handle a $2,000 emergency like right now. So with that being said, this is why it's important to ask yourself, like, should you be investing? Because if you don't have no savings or no emergency fund, whenever you start investing, the goal whenever you invest is to invest for the long term.
Mm-hmm.
You're not supposed to be buying investments with the idea of, oh,
I'm gonna get out of debt.
I'm gonna get out of this right away. Like, I'm trying to get a quick flip. Like, I'm trying to make my money double, triple in 2-3 months and then get up out of there. Like, you shouldn't be using money that you need right away whenever you invest in. Mm-hmm. And the only way that you can really, really ensure that for yourself is by taking that time to really build up that emergency fund, them savings. Like, have something to protect yourself so that you don't just get messed over out here in these streets, because it's really pointless to invest if in less than a year you're going to pull all this money out for an emergency expense.
Something that just caught you off guard. Like you fucking up your long-term growth. Like I saw somebody put it earlier, like you fucking up your ability to grow compound interest over the long run. Like you don't even understand what you're doing whenever you pulling out that money so quick. Like he said, this is for the long term. We see a lot of people, they get into options trading, they get into all of these things just to make a quick flip, which is cool. I'm not knocking it. But you need to understand the true principles of investing. The true principles of investing is for later down the line. It's not for you to invest, hey, I'm about to put $1,000 in this month, and hopefully by the end of the year, this 1,000 then turn to 10. That's not realistic. Do you know what type of numbers that is? What is that? 10, that's a 10x return, right?
Yeah, that's 1,000%.
Yeah, like that's 1,000%. Nobody in the real world is getting those numbers. I don't give a fuck
unless
who
you
is.
invested in Tesla last year.
Yeah,
I ain't gonna lie, they went crazy. Tesla went like 900% last year, but that's some unicorn type stuff. Like, that's not common. Like,
even Bitcoin, like Bitcoin going crazy right now. And right now we're kind of in some times where it's on what is called an everything run. First, it just started off with like Tesla, Instagram, Amazon, these companies. You would see a lot of these tech companies they was taking off and really holding up the economy this last part of the 2020. This last quarter, you saw a lot of the tech companies, but I was listening to Wall Street Journal. They're saying it's an everything run right now. You got bonds going crazy. You got Bitcoin going crazy. You got stocks going crazy. You got emerging markets going crazy. So right now, you might be seeing these astronomical returns, but I promise you that shit will not last.
Yeah.
It's no way in hell this shit is gonna last.
Like, so definitely always, with that being said, making sure that you keep in that long-term mentality with it. Like, you don't always want to put everything, like, also with some of these things we mentioned, and some of these things are kind of risky, guys. It's not like this is just risk-free investment. But I kind of want to get into the next question that I want
that you should ask yourself.
Yeah, that you should ask yourself before you get ready to invest. And that question is, do you have high interest debt? That's another one. So
what is high interest debt, my brother?
So let me break it down some more. So, like, high interest debt is whenever you gonna be paying 10, not I say 10, let's say 15% or greater in interest on your APR for a card. So say like you got a credit card, whenever you first get your credit card, like your very first credit card, you will get this introductory offer from this company that's gonna give you like a 0% APR for like the first 12 to 18 months.
Mm-hmm.
And then if you look in your terms after those 12 to 18 months, because you probably don't have a credit history, they're going to offer you a card that has like a 25% APR. So with that said, like if you run up debt on that, you getting charged 25% on the year on that debt. So if you got $1,000 of debt, you're gonna pay the $250 in interest, and that's just me assuming that you're not gonna use the card no more. You just gonna make more than the minimum payment, which most people don't.
It ain't gonna fucking happen.
Most people don't.
Don't even lie to yourself.
So, like, really looking at, do you have that high interest debt because
Tall Guy Tycoon, shout out.
Hey, shout out to Tall Guy Tycoon. But do you have that high interest debt because if you out here paying 25, 15, 20% on credit cards and on loans, like personal loans and shit, when you're investing, are you really helping yourself right now? Because all the money you make in investing
is being taken away.
It's being taken away. Like, don't get me wrong, I'm all for people investing. But if you got all this debt and if all you can do is invest and your money ain't even yours because you got more debt than you got investments, you might want to reconsider what you're doing right now. You might want to look
into actually paying off your debts first, like
getting rid of these debts, because this is going to hurt you from a long-term cash flow perspective,
and it's going to fuck up your credit. It's a few things that's going to come into factor. The longer that you hold this, like you said, the cash flow over the time, year over year, if you don't eliminate these expenses right up front, they're going to just keep on accumulating this debt. It's going to keep on riding out. So you have to understand ways to get rid of that. And there's two methods that you can use to get rid of paying down debt. One is the avalanche method and one is the snowball method. Both of those we talk about in our book. Once again, Managing Money Like the 1%. If you'd like to check it out, link in the bio. But you should be paying off that debt first. So once hey, I'm done with this, or at least pay it down to where it's not hitting you as hard. Like, make sure that you taking care of the highest interest accounts first. Like, make sure that you trying to get off of that. Make sure that you getting that off of your chest. So now once you start moving to your investment, okay, I don't have to worry about paying $50 to my credit card company. I don't have to worry about paying $400 to my car. I don't have to worry about paying this $300 to my student loans. Guess what? That's 400 plus 50 plus 200 to your student loans. That's what, 650 right there? That's 650 that could be going straight into investing. So now what you're really doing is you're leveling up even faster, because once again, going back to that compound interest from earlier, the quicker that you get that money in and the longer that you're able to let that money sit and accumulate, you're able to accumulate more compound interest. Compound interest is going to be slow at first. Like, you're not really going to see too much of nothing. But over the years, you'll be thankful for the fact that, hey, I put this money in earlier. And I'll talk to a example from Money Master the Game. It's two brothers. One of them invested for the first 20 years of his life.
When he was 20 to 40.
20 to 40. He invested for the first 20 years of his life. And then he stopped investing. And he was investing maybe like,
don't make us lie.
So yeah, I don't remember the number.
It was probably like $500 a month.
Yeah, I for sure remember the number of the brother who started investing once he was 40. The second brother started investing once he was 40 until the age of retirement, which is like 60, 65. He was investing $100,000 a year. The brother who started investing the first 20 years had over like $1.2 million, whereas the brother who was investing for those last 20 years, he didn't have nearly as much. He had like a percentage of that. And I was just like, damn, why?
I don't want to get into the
I don't want to give the
because I know you just
numbers.
said 100. You was investing 100K a year. I don't think it was specifically 100K a year, y'all. Just because 100K a year over 20 years is more than
Yeah.
$1.2 million. But the point of the illustration is the fact that you can start early and stop earlier, even if you wanted to, hypothetically. And the fact of the matter is, because you're having this money sit here and growing, especially if you got some retirement accounts like a Roth IRA or a Roth, whatever, that's, traditional, that's, you have already paid taxes on this money. Now you have this tax-free growth for this money that can compound and grow over time. And I know my brother Jalen mentioned the that snowball and avalanche method. For anybody that's also familiar, interested in trying to get their credit together, we also put out a course on that, everybody. So I want y'all to tap in with that if y'all really a person trying to get your credit together, trying to deepen your understanding of how credit works. We put a course together. It's called Credit Fundamentals 101. And the basis of that is showing you everything you need to understand about credit so that you can do it yourself. You don't need to pay for credit repair. You can maintain a good credit score and make sure you're not getting fucked on these loans like we was just talking about. Getting these 20% high ass interest rates is going to cost you more money over time for having bad credit. So if that's something you interested in, y'all definitely tap in with that. Shoot us a DM. We might shoot y'all a promo code. I don't know. We may just do that. But yeah. So I think now I want to go into the next question.
Yeah.
That I think you should be asking yourself before you get ready to invest. And that is, do you understand the risk associated with said investment? This is a question a lot of people really try to glance over, especially people that hit us up that's trying to be like, hey yo, just tell me what to buy. Because whenever you say something like, hey yo, just tell me what to buy, you don't understand the everything, the underlying asset of the security that you're purchasing. If you just buying off a hot tip and you just buying because somebody told you to, you don't really understand what you're putting your money into. You don't understand the risk associated with it. You don't understand like how you could lose, or if you can lose, or like what you don't even, whenever you just buying off hot tips and shit like that, you not understanding the
hype.
risk. Yeah, you buying hype. And that's how a lot of new investors, and
Get fucked over.
we fell guilty to that shit ourselves.
Like, yeah, this is some shit that I actually learned, and I started teaching myself. Like, I have a principle now. I do not buy all the damn thing. I have a principle now. I do not buy on days where the market is green. I only purchase stocks on red days now. Like, I don't give a fuck what it is. I don't give a fuck how much they talking about it. Unless that motherfucking stock is down, I am not buying it.
That's a major, like, buying on the red days. And just also when it comes to just risk in general, like, somebody might buy Tesla prior to the split, or Apple prior to the split, and after the split it dips, and they didn't understand everything, so they sell out because they're like, oh man, it's some bullshit. I was supposed to make money. I lost money. And without them understanding the risk or even the way that this shit works properly, like, if you're an investor that understands that you don't lose money at all. You only lose money when you sell. If that ticker is down and you still holding it, guess what? You still own the asset. The price can still go up. You didn't lose nothing. That's just hypothetical numbers right now. But like, god dang, I lost my train of thought. Shit.
This guy here.
It be
He was
happening to
talking
me,
about
y'all.
whenever holding on like you're not selling like you're not losing.
Yeah. Like, whenever you just don't understand what you're doing in that regard, you gonna mess yourself up. That's all I'm basically telling you here. So like, just don't be buying shit just because people told you. Make sure you sit down.
Yeah, go
research. Understand, what does this company do? How do they make money?
Yeah, like, really understand
who's their CEO. That's something we talk about in our free guide, 5 Simple Ways to Research a Stock. Looking at who's the CEO, looking at their financials. How much money did they make? How much money did they spend? How much money do they owe?
All of that type of stuff, and that's for long-term investments. Even if it's not just the stock market, because there's alternative investments. Whatever you're investing in, you need to do the research. Same thing with Bitcoin. Bitcoin's, once again, on a tear, going crazy. But do your research. Why are you investing in the Bitcoins? It's just because your homie down the street told you, hey man, I got some Bitcoin, I made $1,000. Why? Understand, why are you investing in this? What is your goal with this Bitcoin? Like, have these type of things set out in your mind. Even with us, with this car, we have a car that we invested in. It's a rental car, but we still had to understand what is the risk that comes with this. Somebody could take our shit and really just run off with it.
Mm-hmm.
That's a risk that we had to take. Guess what we did to mitigate that risk? We got the top of the line insurance and made sure, you know what, we're going to pay for this. And if something does happen, our car is fully recoverable. Like, at least we're able to recover this money.
Mm-hmm.
Same thing with, what's another alternative investment?
We gonna get into a couple of them later. We gonna talk.
Okay.
Yeah,
I'm jumping
you
ahead.
jumping the gun. You jumping the gun. We gonna get
My
into a
fault.
few of them. We gonna talk about some different investments that you guys can get into later. A few alternative investments and a few just different, more traditional things, and maybe a couple things y'all didn't hear about. I do see we have a question on the Instagram side. Someone is asking, what is our preferred broker? So we hear a lot of people rag on Robinhood. Robinhood is not terrible. I don't mind using Robinhood, but they have had issues where like whenever it's a lot of like a highly volatile time or like a lot of shit's going wrong, like March 23rd last year, whenever the markets crashed, a lot of people lost out on some money messing around with Robinhood. So with that, a lot of people, a lot of the bigger traders that I know, a lot of people who are more legit in this game, they've told us they prefer the more experienced brokers. And I can understand why they do that. Like, so I know I got a long-term portfolio with TD Ameritrade now. Just looking at them as another option because they people that won't fail necessarily because Robinhood is
Yeah,
relatively
it's
new.
still new.
They're industry disruptors in that they came in and changed up the game. Like, but I like Ameritrade. I know Jalen's a big fan of Thinkorswim. That's
That's
TD
still TD
Ameritrade's
Ameritrade.
platform, but it's a different, kind of different
Yeah.
platform. Um, but that's a little bit more advanced. You might want to take some time to learn that one. Other brokers, you got
Webull.
Webull. Yeah, if y'all click the link in our bio, y'all can
I,
sign up
I
with
I
Webull
learned
and get
some
2 free
interesting shit
stocks.
about Webull. Guess
What's
who
that?
owns Webull?
Who's that?
Alibaba.
Really?
Yes.
That's some crazy shit. I
That's what
never
the
knew
fuck
that.
I said, man.
I thought it was a white dude that owned Webull.
Nah,
I
man.
never would have known. But yeah, Webull is a pretty
I see
good.
E-Trade.
Yeah,
Our
E-Trade,
girl Terry likes Trade Station.
Trade Station. Yeah, Terry
Fidelity is another
Easy.
one. Even if you got Chase now, you can invest
Yeah,
through
Chase.
Chase.
Mm-hmm.
Cash App actually lets you invest. Like, there's a lot of people stepping into the industry.
Mm-hmm.
I don't know how comfortable you feel with doing it on Cash App. I personally don't invest on there, but it's ways for you to get in. M1 is another great.
I bought Bitcoin on Cash App. I mean, you bought Bitcoin on Cash App. You
I bought
didn't?
it on
You
Robinhood.
bought it on Robinhood. I wouldn't. I
Yeah,
got.
but those are some of them, and just look into them. Make sure you understand what are their fees that they're charging you. Make sure you understand if there's a certain amount of money that you need to have into your account. If they're going to charge you a penalty for that, you want to start looking into all of those things.
Mm-hmm. And the last question, and I guess this is kind of plays into another one that I've
Oh
asked.
damn, we both started crypto. Slit.
Dang, pressure! I gotta go mess with them boys.
We got a
The,
Webull link in our bio too if y'all want to sign up
yeah.
with them.
But the other thing I wanted to mention, it kind of plays into the emergency savings part. And this is just with long-term thinking. Before you just start investing in like individual stocks on your own, trying to build a portfolio like that, make sure that you like ask yourself, are you investing for retirement in any way? One mistake that a lot of people get bit in the ass with, and when my brother was talking about with compound interest, is not taking advantage of these different retirement accounts. We kind of touched on it already. Like a Roth IRA where you can put up to $6,000 a year and let that grow tax free for the next 20, 30, 40 years, or taking advantage of 401k with your employer match where you getting essentially free money for investing a portion of your money into your future. Like, before you go and try to start building out your own portfolio thinking you about to be the master trader yourself, like, definitely take one of those routes of building out something for the future that you can't touch right now. Always, when it comes to investing, be thinking about the future. You don't want this money all to be readily accessible. That's a good way to stop yourself from going and touching that money, even if like you come across something. Then this is why we always say make sure you're investing with money that you don't need. So like putting that retirement fund off to the side, just having that money sitting there that you can't touch, even in an emergency, or like if you need it in emergency, like it's like your last resort. Because whenever you have retirement accounts, one of the big benefits of it, and a lot of people say they think retirement accounts are stupid for it, is the fact that you can put your money away, and like whenever you put it there, you have to pay a penalty if you want to touch that money before a certain
Mm-hmm.
age. Now, some people say that's dumb. Why would
Why
I
I
want
gotta
to?
pay to
Why?
touch my own
Why I
money?
gotta pay to touch my own money? And while I understand their thought process in that, like, yes, it's your money, you work for it, you earned it, cool. I think it's a pretty good fail safe in that you can really have something set aside for yourself, even if you fucked off everything. So, like a good example I like to point out is an annuity actually by with Allen Iverson. Allen Iverson,
That's a good
he's
one.
still getting paid
From
by
Reebok.
Reebok. He did a deal worth, don't make me lie to you on the numbers, I
I
think
think
it
it
was
was
like
like a
60 something mil with Reebok back in his prime days. And the way the contract was structured was like half of that money, I want to say it was like $30 million, wasn't to be paid out to him till after he touched a certain age. And then with the way annuities work, it pays you out monthly, a certain rate for a certain period of time, or I think until you die, depending on
how you set it up.
how you
Yeah, it's
set it up.
different
But
regulations and nuances.
the power in that is that AI, for anybody that's unfamiliar, at one point he was publicly saying that he was broke. He ain't had no money. Like I remember the time I was still in high school. It was like right after he got out the league.
Mm-hmm.
He was appearing on all the sports shows, and they was asking him if he wanted a job, and he was like, "Nah, I don't really think I want to do this for a living." And it's like he was dead ass, like, I don't got it like that right now, bro. I blew through my NBA cash, but like having that provision in place has secured him for the rest of his life, even though he already fucked up once. So I think that that retirement account piece is important when it comes to should you be investing, is because it can give you, it's still investing, right? But it gives you another layer for it later. We always want to make sure we're stressing and really pushing the fact that you need to be thinking about tomorrow. We live in a YOLO society where everybody tells you you only live once, go enjoy yourself, do this shit now. You don't know how long you're going to be here. But the fact of the matter is, the chances of you waking up tomorrow are a lot higher than the chances of you dying, especially if you're a young person. So you need to stop that bullshit. I'm not saying don't enjoy your life. You can still enjoy your life, but plan to enjoy it. Don't just be like, I got $1,000. Fuck it. This is my last 1,000. I'm about to go on the trip.
I'm about
That's
to go buy me a
stupid.
PS5.
That's stupid. If you ain't got you just got your stimmy and you late on bills, why would you buy a PS5, right? Like that's stupid. Don't be stupid with your shit. That's the biggest thing, I guess, when it comes to that part of it. Yeah. So yeah, we actually gonna talk about some of that next. We're gonna get into,
I want you to scroll up because this was go up.
let's see.
This was a ridiculous question.
Who asked us
Go
something
up, go up,
ridiculous?
go up, go up, go up. The same person. Go up. Keep going.
Hey, YouTube family, if y'all on
Yeah,
YouTube,
shout
y'all
out
make
to
sure
y'all on YouTube.
y'all like
Shout out to
and
Tender Beauty. Shout out to Brittany Williams. Shout out to the Keisha Hustler. Hey, thank y'all for tapping in. Shout
Hey.
out Don Tall.
And Instagram family, y'all make sure y'all tap in with us on YouTube. We about to get off of Instagram before we get into these different investment vehicles, just because Instagram be cutting our time short. We don't like whenever they do that.
Yeah.
So y'all make sure y'all subscribe to our YouTube channel, man. The link is in our bio to do that. All you got to do is click on there. They got that video. It's our girl Maria. You click on that, go to our YouTube channel. You can see us live right now. Y'all come on here. And for the YouTube family, for everybody that's on there, I ask that you like, share, subscribe this video. Like, subscribe to our channel, share it with a friend, share it to your YouTube channel. You know what I'm saying? Just help us grow. Hit that like button, mash that like button. It helps the algorithm. We really trying to, like we said, push this content to our people and get these things going.
Yeah. But the question was, when should you sell an investment property that's paying the mortgage plus an extra $1,000 a month? Why? Why you want to sell it?
Is it a headache? Is it? I know all the people. We don't personally own any rental properties. I don't want to sit here and come here and tell you I got all these rental properties. Congratulations, first off. I'm proud of you for having that. But if the mortgage paid off
and it's paying you an extra $1,000 in cash flow
in your pocket, I'm not understood. Like, do you have problems with this property? Is it causing you a headache? Do you just want to not be a landlord anymore? But the thing is, if you think about it, that's $12,000 a year in your pocket for owning that property. Now, granted, you're not gonna keep all 12K for yourself. You're gonna have budget out for capex,
CapEx
all
and
that
all of
stuff
that.
like
Yeah.
that. But the point of owning real estate is to create your own retirement, like our boy Benny said. Benny Poe, he said that
Pew.
that's Pew. I'm sorry, I keep doing that to my man's. Benny Pugh, he said that like he was in the music industry and he was realizing like he was getting these big checks and stuff, but that's not going to stay here forever. Real estate is forever. People need a house. People need to live there.
Guess
People,
what? They ain't making no more.
they ain't making no more land. So if if you got that and it's paying you and it's going well,
I don't see why you
I don't
should.
see why you want to exit.
Like you said, unless it's a headache, something that's giving you problems, I don't see why you would be like, hey man, my rental paying me too much.
COVID moratoriums and renters not paying. If the mortgage paid off and the renter's not paying, though, is this the same person that said it?
Yeah, but once again,
Mortgage is not paid off, rental moratoriums.
but once again, we're
renters.
not real estate investors, so I can't give you the answer to that one.
Yeah, and like you said, if it's this your situation, you want to get up out of it, just don't sell yourself short. I know one of the big concerns for a lot of people right now is like, I know I seen the mention of it. Like if y'all real tapped in with like a lot of these big time investors like Ray Dalio and people like that, they've been talking about this 20% crash of the US dollar because during the pandemic, the government's been printing money out the ass, y'all. They just been printing and printing and printing. And y'all, that money is coming out of thin air. We got more money than we ever had in circulation
right now.
If I'm not mistaken, they printed more money during the pandemic than they did during the previous 5 years. So like just to give you an idea, they just printing it and printing it. So like I'll say that to say, if with the potential downturn, just make sure you don't F yourself up. If you got the mortgage moratorium, you ain't gotta pay it,
Yeah.
Just keep on keeping on.
I would definitely try to consult with investor who's a little bit more savvy, got some more teeth in the game. I definitely try to consult with them.
Mm-hmm. So
I would advise you to go read Tony Robbins, Money Master the Game, my brother. If you fought it, like that book got so much gems. It'll teach you so many different investment tips because one thing he drives home is it's never too late to start. You might have a little bit more work to do, but it's never too late to start. Just because you're starting later, you can still start and still end up living a good life.
Yeah.
You just gotta understand, what is my goals? Like what do I desire after retirement? You got to start thinking about some of those things. But definitely go check out that book, Money Master the Game by Tony Robbins.
Tony Robbins, great book. All right, but look, Instagram family, if y'all want to continue watching where we go into these different investment vehicles and saving vehicles that y'all can use, I'm dead ass on y'all. I'm about to cut y'all ass off. Go to our YouTube channel if you want to catch
tap
this.
in on YouTube.
Yeah,
tap in on YouTube.
Shout out to the YouTube family.
Yeah,
Lock
Goddess done tapped in.
people on our first YouTube live. Hey man,
hey, this
is our first
YouTube
one, live. Y'all make sure y'all go join us over there. All right, peace, Instagram.
Yo, YouTube family. What is popping?
It's just us now, guys.
Yeah,
it's just us. So
Tinder Beauty said, I'm not gonna hold you. Y'all have me reconsidering my financial plan. And that's always something good to relook at. Your financial plan shouldn't be something that's always permanently set in stone. You're gonna have to always go back and relook at it and kind of make some tweaks to it because the economy changes, tax law changes, few things changes over the years. So I would definitely suggest that, look back at it and see, what is the correct way for me to go about doing this.
So
Lewis Porter Jr., the mortgage moratorium will last as long as the banks don't foreclose on the owners for lack of payment. And the banks will foreclose on the property. People are going to be homeless after all of this is over. Hey, I ain't gonna lie, I do see it getting kind of ugly, my brother.
I'm still kind of waiting. I know the government they kind of like everybody was kind of geeked. I seen some landlords posting shit. They was like, "Ooh, that moratorium of rent due on the first, evictions come back," and then the government just kind of extended it again.
Mm-hmm.
I definitely think they're not gonna let uh millions of people be on the street. I think, if I'm not mistaken, the Fed Chair Jerome Powell has said, "Listen, y'all, we're gonna keep printing money till we get through this thing." So that fall of the dollar is still kind of inevitable, and that kind of make me want to go into our next point that we want to get into. So YouTube family, shout out to everybody on YouTube. I
Yeah,
see we
shout out
got
for
more people in
tapping
here.
in.
Y'all make sure
Appreciate
y'all
y'all.
like, subscribe, rate, comment to the channel.
Yeah.
We love hearing feedback from y'all as always. Y'all make sure y'all tell us what y'all trying to hear. So we want to get into some different ways to save and invest. So obviously, saving and investing, those are two very general topics, and people think whenever it comes to saving, there's only one way to save. You got putting your money in a traditional savings account, and you could keep it in your house. You can keep cash on yourself. Um, those are not the only ways you could save money, and we kind of want to go into just some different ways that you could be thinking about putting money away in what is considered savings or like a security type thing. So first off, just want to start with the traditional savings account. Traditional savings account is good as always. Like, you can put your money in a bank account like with somebody like Chase, or I know I got a Chase account. I mean, Chase, one of these, any bank, and they going, you got a secure thing going on. These are real big banks. They got a lot of money. They FDIC insured, and you got security in that, but they're not going to be giving you much for your money.
Mm-hmm.
So it's not our favorite way to save. I think when it comes to like a regular savings account, it's good to keep like maybe your like just on hand emergency savings type thing, or just like some cash on hand savings, but it should not be your go-to savings account for everything. So excuse me, y'all. The
Such a
next
pig.
huh?
Such a
Hey
pig.
man, I'm sorry, dog. I had a little burp in me. Y'all know how it is. The next thing I kind of want to get into is another way to say that people don't always often talk about is money market accounts. Money market accounts are basically the same thing as a savings account. It's just that they pay a little bit higher interest. And instead of like a savings account where you can kind of just access the money is easily, with money market accounts, you can access the money, but the way you get it is not like transferring it to your bank account. It's like you can write checks to people from money market accounts, but you can't write a bunch of checks out of money market accounts. So they limit the amount of times you can interact with this money.
Kind of
So
once again, like your savings account,
yeah,
you have certain withdrawals you can do throughout the month.
like with money market accounts, it's a good way just to put some money away if you want to get a slightly better return than the bank will give you, but it's not going to be like something astronomical. Another way is online bank accounts like Ally. These often they got these high interest savings accounts. So with banks like Ally and a lot of these online banks, because they don't have all these brick and mortar stores and this high overhead, they're able to pay higher interest. Right now, we're in a really low interest environment. Right now, don't make me lie to you on the exact number. I know the Fed, the short term interest rate is still in the 0 to 0.25%. I think long term, we're looking at like right under 2%. The average of, I think the average was a little bit higher than that going in, but interest rates are like really low right now. But at one point, these online bank accounts were paying you like 2 to 3% on your money just to have it sitting in a savings account, which is unheard of. Like if you go look at your bank statement if you with any other bank, and I promise you they're gonna have you on there like with like 0 point whatever percent. They're not really paying you like that. They're not trying to help you out. So that's another way you can go on about it. Ally, I know our brother Kelly, he's a big advocate of them.
Mm-hmm.
He uses them for his emergency savings. With bank accounts like those, you don't get to access the money as easily still. I think like it's the processing period, kind of like with a couple of these other apps. Like it's not like your bank account where if you need the money today, you can pull it out. With Ally and services like that, I think it's like a 1 to 3 days where you're gonna have to have the payment processor. So it might take a little time, but you could get it done. It's another good alternative. Next to that, we also have savings bonds. It's another one. Another way you can go ahead and save some money. So savings bonds, it's a bond, which is a loan to the government essentially, where you give the government money and they're going to pay you your principal back plus interest over a set amount of time. Is called the maturity date. So most bonds, like the way you get most of your money is like they pay you what is called a coupon rate. It's not going to be like astronomical interest. It's going to be a little better than a bank account, better than a money market account. Um, and it's just kind of a more secure way of storing your money because basically you're banking on the government. Like we just was talking about, the government be out here printing money right now. They and Uncle Sam ain't never missed his bills. They pay for 100% of their bills over the what around 300 years America been existing, 200 something. Uncle Sam don't miss
Mm-mm.
payments, so it's just another way to save your money. And those can be purchased from the Treasury directly. And then another one is certificates of deposit. This is just another way to save some money. So certificates of deposits, you may have heard of these CDs. This is whenever you go to the bank or another financial institution and you go to them and you're like, okay, I'm gonna give you set amount of money, whether it be $1,000, $10,000, and you're gonna keep this money over a set period of time, 5 months, 6 months, a year, 3 years, and we're gonna pay you a better interest rate than what we typically would pay on these types of things because you're dedicating this money to this. You're not going to use this for anything else. You're just going to be spending. I mean, you're just going to put this money here and the bank is going to be able to allow to use this to invest, and then whenever that maturity date hits for your CD, you'll have access to that capital again. So those are CDs. That's another really good one. And those are just some different ways to save, like just thinking about different ways you can put different places you can put your money to make sure that you're really maximizing it and protecting yourself. Because it's not just typical savings accounts. You're not gonna get the best returns. Some of these other vehicles that I just mentioned, these can really help. If you found that a little helpful, y'all give us some feedback. Let us know if y'all didn't know about any of these things, if y'all were interested in more about these things, just give us some feedback on that.
Yeah, and sorry y'all, I was not ignoring or like not paying attention. We got scammers on the page once again. Like I said, I'm trying to make sure people not losing money. I did see Lewis Porter Jr. Did you talk about the CDs?
Yeah, we were talking. I was just talking about CDs,
Okay.
short term CDs. So like Yada. Okay, so I
Oh, I
just
heard about
recently heard
Yada.
about Yada. Yada's pretty cool. I think short term CDs. Me personally, I'm not the biggest fan of them, just because.
Once again, banks be fucking you.
Yeah, like I think for the interest rates they pay you, you can put your money elsewhere. They're not gonna give you, like I said, nothing astronomical. They may give you like a 3% return on your money over like
The
a
next
couple
10
years.
years.
Yeah, like I don't think CDs are amazing, but that service Yada is pretty interesting. So for people that aren't familiar with Yada, Yada is like a savings challenge slash account that does like a lottery type deal where they get different people, like you're rewarded for saving. Like by saving, you're entered for a chance to win. And Lewis, correct me if I'm wrong on that one, my brother. But you're entered for a chance to win just by saving. So they kind of revolutionized saving with the fact that
Incentivizing it.
incentivizing you to save. So if you're interested in that, that's another great service that's at your disposal. Yada, YOTTA
Yeah.
is another great one. Um, Anything to add, my brother? Before we move on to investments, any other ways to save?
Nah.
All right, y'all. So next, we want to get into a couple different investments that you can get into, a couple different investment vehicles. So one of our favorites, first and foremost, want to talk about peer-to-peer lending.
If you
Uh,
live in Texas, you can't do it.
you live in Texas, you can't do it, but it's still. I'm finessing. I live in Texas right now. Don't tell the government. Um, yeah, but peer-to-peer lending. So peer-to-peer lending is one of our favorite types of alternative investments that you can do. So what peer-to-peer lending is, you are putting your money up with other people like yourself through a financial institution like Prosper Fundrise, somebody like that. And what you're doing is pooling your money with other investors to invest in loans from people like yourself who may have had bad credit, or they didn't get approved for a bank loan, or they didn't want to go through a traditional financing route. So these people come to these types of platforms, peer-to-peer lending, and they borrow money from peers. And what I really love about peer-to-peer lending is, with the platform we use, it's called Prosper. What you get to do is, like, they give you all the information on a person. You get to basically play the bank. You get to be the bank. And it's really dope because you can look at somebody's financial situation. They tell you where they work, tell you how many years they've had credit, if they had any delinquencies in the last 7 years, how much credit do they have, how much of their credit has they used, do they have a mortgage or not. And you really get to kind of get a behind the scenes look at some of these people's personal finances and make the decision whether or
Let me
not
see.
you
Let me
want
see.
to
Let me
invest in
see.
these people. What you talking about?
'Cause I'm trying to see if I can pull it up. You can keep on talking, my
Oh,
brother.
you trying to pull up Prosper? Yeah, but Prosper is one of our favorites. So you can go in there, and it's a lot of people, they like to invest. They like to get loans for like debt consolidation, home repairs, personal loans for like dental work or something like that. Just different things. I love it because you get to really kind of help people and get paid. So the way it works, like, you all you need for like as little as $25, you can start investing in notes basically. So it's like a mortgage note almost. Like, you put $25 into the pot for, say, like, this person, they want a $20,000 loan at for and with Prosper, I'm gonna speak to Prosper because that's the one I use. Um, you and people can have to fund up to 70% of the loan,
Mm-hmm.
and then Prosper will fund the other 30%. So you can get involved on these loans for like as little as $25, and every month,
They
whenever this
gotta pay
person
you.
pays for the next 3 to 5 years, you're gonna receive money on your principal and interest. Now, I don't want you to think if you put up $25, that's shit gonna make you rich.
Oh no, it ain't.
You're not gonna get rich off $25. But what I love about it is that it's a really great compounding effect, and that it's whenever you pick good people, it's a really good way to get safe returns. So far, just to give you an idea of mine, like, I think with my Prosper right now, I'm doing like a dollar cost average method. I just buy a note a week, just kind of like to be able to stack it up. But the notes that I bought already are able to purchase me multiple notes in a month. So that's like one of the beauties of it. Like, it's almost like a drip investing type thing where your investments can start paying for other investments, and you can continue to grow that in perpetuity by investing in these loans for 3 to 5 years with people. Now, with the risk associated with Prosper, when it comes to Prosper, some of these people are not the best lending candidates. Like I mentioned, traditional financing options have kind of been denied to some of these people, or they didn't go for a reason. It's a reason the bank didn't want to lend to them. So with that, you got to be really careful with who you're lending your money to. You don't want to just be lending out to anybody. There's some people, they give them letter grades, so like they rate them A, B, C, D, E,
And
and
then
then
the
I think
high
high
risk.
risk. You might want to mess if you can mess with the high risk people. They're gonna pay like 30% interest on the loan, but let's keep it realistic. If they got to pay 30% interest on the loan, they not the best with money, or like they haven't proven to be the best with money. The bank don't want to lend to them, and they got a high ass monthly payment. Do you think they're gonna be able to make that for the next 3 to 5 years? And that's just shit to think about when it comes to peer to peer lending. I know my brother Jalen, he trying to pull it up right now, see if he could share his screen. I don't know if we could do it on YouTube live.
We can.
We can.
Yeah.
So boom. All right.
Wow. Can y'all see this?
Let us know if y'all can see this or not. And they got a high ass monthly payment. Do you think they're gonna be able to make that for the next 3 to 5 years? And that's just shit to think about when it comes to
This shit
peer to
trippy.
peer lending. I know my brother Jalen.
But it's trippy. But
Yeah.
yeah, can y'all see the screen that we're sharing? Let us know if y'all can see the screen.
Give us a thumbs up, like the video or something.
I see it. I see it. I see it. I see it.
Oh, all right. Yeah. Well, go back to
I
it.
love y'all because y'all just talk straight and not all stuffy and boring. Hey man, we gonna give it to you the real. No rap cap, none of all of that bullshit.
I see somebody asking about Republic.co. I personally don't invest on Republic.co, but I've heard good things about it. if you a fan of our podcast, our brother Philip Michael, he actually has a campaign on Republic.co. So they're a real good vetted platform. What he's doing is that's another alternative investment for anybody as well. So it's similar to the project with investor Chris Senegal, where he's went out and acquired a piece of real estate on Temple University's campus, and they're building one of the first smart AI tech buildings. And for as little as I think it's $79, you can own a piece of that. And once again, this is not one of those investments that's going to sit here and make you rich, but it's just another way to put some money away and invest in high value commercial real estate property. A lot of people, they want to get into stuff like that and they don't know how. That's another way to invest. So yeah, Republic.co is a pretty resourceful thing if you ask me. Definitely worth checking out if you are a person looking for more investments.
All right, y'all. And this is Prosper. I'm gonna pull up Prosper. I know that it's kind of delayed, so
Yeah. But
this is Prosper. And as David was saying, you can look and you can see ratings. You got D's, you got A's, you got double A's, you have C's, D's,
can you
B's.
go in and click on one of them?
I just wanted to show them all of the ratings right quick.
And yeah, like the funding, like it shows you what percent of it's funded, and
it gives you the IDs. It also gives you the loan category.
So that's important.
You can see what they're actually using this loan for. There's debt consolidations. People need medical and dental bills paid, home improvements, others, household expenses, vacation. And it'll categorize that. Then it also goes to the amount that they need. It also tells you how much this is projected to yield.
So that's just like the percentage of interest they're going to pay over the life of
the loan. And then this also tells you the percentage that is funded. So it says it's stop.
Resume share.
Oh, ain't this some shit?
Okay, I think we good.
Yeah.
All right. So yeah. I know my brother was also usually pointing out kind of just the different things in there. It shows you how much time left till it gets invested. Y'all, please bear with us. This is our first time on YouTube Live. But can you please click on one of the loans so I can kind of go into more of what they can look at on there. Then you gotta click on the listing ID. Yeah. So this is kind of the back end stuff that I was talking about, where it lets you be the bank. So it gives you information on the actual loan itself for this person. It tells you how much they're gonna pay a month. The investor services fee, that's how much Prosper's getting paid.
I'm trying to get this shit on the same damn thing, because it keep on stopping. Because this is not the original window I went to. Sorry, y'all. Once again, we do apologize.
Can y'all still see Prosper?
Nah, because it's not. Because this is the screen that we share.
So, is this window?
Yeah.
How'd you drag it out of there? You guys just drag it back in there. Boom. Okay. All right. Cool.
Okay. So this would be a debt consolidation.
Yeah. So this is just kind of what the back end of a loan looks like. It tells you how long it's going to be, 3 years. So over 3 years, it will yield that. And more so what I was talking about is the information you can get on the borrower. So this is where you really get to be the bank. They don't give you specifics on everything, but they do give you good information. Like their letter rating system is pretty good. What I've noticed is like you find some good deals in the D's and maybe even in the high risk. I typically don't mess with high risk because
I have messed with high risk,
and they defaulted on your ass.
Me. I ain't gonna lie,
they defaulted on your ass.
They sure did.
I don't mess with them.
So I would suggest y'all don't fuck with them.
Yeah. So like this person, they had a delinquency in the last 7 years. They got their first line of credit in 2014. They give you all this information: how many lines of credit open, their utilization rate. So with debt consolidations, usually they'll have a lot of people who got high ass bank card utilization rates, which is why they're trying to get their debt consolidated. So these are the type of people that I like to mess with personally.
It gives you the employment status,
how long they've been working, how much they make,
what's their occupation.
So with a person like this, for me personally, I would mess with them because they monthly payment. This is just my personal opinion with it. Uh, they don't have a ridiculously high monthly payment to me, especially for a debt consolidation where they're trying to put all their bills in one place. And it's you got to think they're already paying on this stuff, so yeah. We love Prosper though. Prosper is a great option. But that's cool. That's cool. It's good. We done sharing about Prosper.
Yeah.
If y'all thought that was helpful, y'all leave a like, comment. Y'all let us know. Give us some feedback in the chat. Yeah. But
Sorry, it was not showing the Prosper screen. So
damn.
look. We fucked up. But
Damn.
what your boy can do? Either we're gonna go live again and we'll do this again, or what we man, I hate this damn shit.
Yeah, we gonna be back on this YouTube live thing, y'all. Don't worry. This is a first time test run. But before we do get out of here, I do want to keep going through a couple of these different investment vehicles. Another one that we like that you can use is M1 Finance. It's a way to invest in fractional shares. And the reason we like that one is because what you can do is put up small portions of money and invest like and diversify your investments by investing in a bunch of different companies. So M1 Finance allows you to essentially build your own ETF.
And they call it a pie.
They call it a pie. You go kind of show them on your phone.
I don't
You
invest.
don't. Oh, you don't
No.
invest on M1. I
Mm-mm.
do invest on M1 Finance personally. I'm not going to pull my phone up on it. But what I do like about it is that you can put, like I said, you can take 50, $60 and your $50 can be bust down between companies like Apple, Tesla, Facebook, all these really big companies that you might not have enough money to invest in now. You can start investing like incrementally and throwing money at like a diversified way. You could even go in and like mimic indexes like the S&P 500 or the Dow Jones or like stuff like that. It just gives you the option to really invest and diversify yourself
Yeah.
against risk. We really love M1. I've seen a lot of growth in it. You can have some stocks. Oh shit. You can have some stocks that's doing like really bad and some others doing really good, and it kind of just levels out because you're able to do it like that. So M1 Finance, y'all interested in that, y'all shoot a DM on our page and we can
Yeah.
get that to y'all. Get y'all some free money too.
Yeah. We full disclaimer, we are affiliates of them. We will get a little
Yeah,
kickback.
yeah, yeah. It's all good though. We are all it's all
Yeah,
good in
we
the
sharing the
neighborhood.
wealth around here
We gonna
though.
get money together. That's what it's all about. Black Wealth Renaissance, baby. Um, other other investments, Bitcoin. Jalen kind of spoke on that earlier.
Yeah.
Bitcoin, cryptocurrency in general, the space is hot right now. Bitcoin just crossed 30K for the first time ever, like a week or two ago, and it's still been booming. What Bitcoin at now?
3278.
3270. I know it was at 33 the other day. Bitcoin is a risky asset class. We're not gonna sit here and act like this is like something you should do if you putting money in that you need. As we were talking about earlier, should you be investing? But Bitcoin is one of those things that's high risk, high return. Um, we know people. We personally did an interview with our boy Justin Redrick, Bitcoin vegan. He told us about like how he purchased Bitcoin back when it was $6,000 and how that really changed his life. It's just one of those opportunities that like you see a lot of people starting to invest in it. You see a lot of these big companies like Chase, uh, Visa, a lot of these already financial institution type places.
Companies that's accepting it.
Mm-hmm.
I know with the new gen consoles, you can now purchase your games and in-game things through Bitcoin. PayPal is accepting Bitcoin. Square last year they made a big acquisition, like $50,000 worth of Bitcoin. So yeah, and we are not from Texas, from Louisiana, but we live in Dallas.
Yeah. I see somebody asking about the car rental business. Car rental business is going well. Our car rental with BWR is doing pretty good. We had a renter in it for the past 3 months. It's been cash flowing for us. It's been swell. I think at this point we've recovered. We bought the car cash for like right under 10K. At this point, I think we've recovered 50% of our investment in less than a year.
Mm-hmm.
And I just recently purchased a rental car for myself. That I just got my plates on it today, turn up. So I'm trying to put that bad boy on hire car tomorrow and get that thing rented out. And I get back with y'all on the cash flow on that. We're gonna keep y'all posted on that journey. Y'all follow me on social media for that one though. David the Goliath. Um, so outside of Bitcoin and a couple other investments, there's one more thing I know I really want to touch on, and that is tips. This is something that we
Talk
heard.
to them about
This is
tips,
something we
man.
heard about. We learned about recently ourselves on Money Master the Game. It's just a different type of investment that most people aren't familiar with. So what tips are um treasury inflation protected securities. So what tips are essentially is the US Treasury is going to, it's kind of like a bond where you're going to give the government your money and they're going to pay you interest. But the difference is where with a bond, you're just getting paid your interest. With these tips, you're going to get your interest adjusted for inflation.
Mm-hmm.
So that's something major that a lot of people don't know about. I know myself, I just learned about them. They're real good for diversification, especially in environments like this one right now where we're uncertain about inflation. We're not really sure.
It's uncertain about a lot of
Yeah,
things,
we're
honestly.
not really sure. Like the government's printing all this money. The GDP is lower. Like economic output is lower and we got more money. So what that means is essentially our money is worth a little bit less. So these things like tips, they're a real good way to diversify against risk on the downside just whenever money is getting lost. And those are just like kind of like bonds. You can buy them directly from the US Treasury. You don't have to go through no broker. You don't have to pay no fees, none of that. You can go straight to the source, sign up for an account on Treasury Direct, and you can buy into that. And that could be another way to really diversify yourself if you're a person who got a little bit more capital. I wouldn't say this is something for somebody like that's just getting started out
Yeah.
investing. But if you want to get some more money, that's a good one. And I'll let you take the last one, my
The
brother.
last one is real estate. Or if you have the capital to solely get into real estate, like real estate is another good investment. Or if you don't have a whole bunch of capital, or even if you just don't want to deal with some of the headaches and some of the things that come with real estate, you can invest into real estate through REITs, real estate investment trust.
Mm-hmm.
And basically, it's like you being able to invest in certain trust and certain funds that either own, you might have a fund that owns malls around America. You might have a fund that owns assisted living. You might have a fund that owns a whole bunch of nursing homes. And what that is, all of these people are paying rent to that fund. And the real estate investment trust, it's going to allow you to buy it on the stock market. So there are certain tickers and they'll pay out dividends. Some of them pay out monthly, some of them pay out quarterly, some of them pay out every 2 months. It just depends on that REIT. But you can invest into this and it allows you to get into real estate. One, you're a lot more liquid. You can get in and get out a whole lot quicker. But
Mm-hmm.
two, once again, you don't have to worry about actually owning the physical asset. You can just control it through that fund. Once you buy into it, you kind of are a part owner of it. But you can start off low. There's some REITs there $50. You might have some of them that's $200. It just depends on what the REIT is. Once again,
Real
just
quick, black owned REIT. I know of a black owned one if anybody's
talk
interested.
to them.
RLJ, it's $13. They just started they just got there. I own a piece of it. We discussed it in our blog, 3 publicly traded black owned companies. This is owned by Robert Johnson, the man that made BET is his publicly traded REIT. Yeah.
Yeah. But y'all can invest in these REITs and it'll allow you to get into real estate. You can get all of the same benefits whenever it appreciate and all of that stuff. Like it's cool. That's a great way for you to get into real estate if you don't want to deal with all of the headaches and stuff. But if you want to be a full-time investor, I definitely would suggest that, hey, start looking into what type of real estate would you
Mm-hmm.
like to invest in. Don't just say I want to be a real estate investor. There's multifamily, single family. You can be a part of a syndication. You can get into these type of funds like he mentioned earlier with Chris and with our boy Philip. There's different ways for you to get into real estate. You don't necessarily have to be the sole owner all the time.
Mm-hmm. And one last thing I just want to touch on because my brother really killed it on the REITs. If y'all love REITs, if y'all ain't never heard of those, y'all definitely are looking at them because those are the shit. Monthly dividends, they have to pay out dividends to people. That's one of the
No
beauties of
ifs,
REITs.
ands, or buts about it.
90% of the profits have to be paid out to the REIT owners, the stock investors. That's so much better than some of these other fiascos you've seen going on. But one last thing I want to touch on is with investing, dollar cost averaging. I think that's one thing that too many people they don't really look into. Just keeping it simple for a lot of people. A lot of people want to time the market. We talked about earlier that example of those two brothers investing, and I just want y'all to leave with the idea that time in the market is much better than trying to time the market.
Mm.
That's extremely difficult. And one way to do against that is a concept. Benjamin Graham, the man who made The Intelligent Investor, that incredibly painful book to read, uh, he brought up the concept of dollar cost averaging, which is you just take a set amount of money that you're going to contribute weekly, bi-weekly, monthly, quarterly to an investment, and you're not going to worry about the price, you're not going to worry about any of that. You just know that when this time comes you're going to buy. And the reason that is important is because too many people try to buy on those good days, like Jalen was talking about earlier.
Mm-hmm.
People buying whenever they see green and all that other shit. Like whenever you dollar cost average into something that you believe and understand, that you did the research and you have a strong belief that this is going to go up, it doesn't matter what price you buy at if you're gonna continue to buy it. So it's one of my favorite things because whenever I very first started investing, Acorns introduced the concept to me. Even though Acorns I didn't make no money on there, the idea of just putting a little bit of money away every
Mm-hmm.
week, and allowing that to grow over time, that has definitely been very beneficial to me. And I think a lot of people could benefit from that whenever it comes to starting in your investment journey. Stop thinking that you need to be able to put $1,000 down and buy a bunch of shares or some shit. You don't need to be able to do that. You just need to be able to start. A lot of these apps, they'll let you do fractional share investing. Like we just talked about M1, there's Stash. You can put a little bit of money, like what you can afford um, right now, and just kind of start, especially if you're young, like you're in college. I think it's really a good thing for anybody in college before you get straddled with debt.
Mm-hmm.
Just throwing a little something, something at something, so you can see it grow. Cause
Throw a quarter of the refund check at it.
yeah, man,
Fuck it. If you feeling frisky, throw half of it.
yeah, man. Because like I said, once again, time in the market is much better than trying to time the market. Trying
Yeah.
to time the market will get your ass whooped.
And chew.
Mm.
I see Rennie says, are you guys straight entrepreneurs or do you have day jobs? Love y'all hustle either way.
Appreciate it,
We are
appreciate it.
full bred entrepreneurs out
Yeah,
here.
we just we did a little seasonal
Yeah.
gig with UPS just now, just
Made a little bread
make a little
during the
scratch
Christmas
during the Christmas time,
holidays.
but waking up earlier. But we full time entrepreneurs, man. We've
Yeah, we
been doing this
focus on
thing,
Black Earth Renaissance primarily.
for a year now, really. Yeah,
Full time.
a year full time. Just going hard with it. Want to make sure we giving our community the best things possible, and that's what we all about. But y'all, this is kind of going long on us. I ain't gonna lie.
Yeah,
I'm
this is
glad
like an
y'all.
hour and a half.
Yeah, I'm glad y'all tapped in with us on this YouTube. Everybody that we appreciate y'all, like that y'all came here. We definitely gonna be on YouTube live more often.
Yeah, if y'all enjoyed this, please let us know. Y'all leave us some thumbs ups or some gems. Drop those in the comments. And definitely y'all just tap into all the back catalog we got on YouTube.
Mhm.
Also, we got a lot of things that we just talk about. We got a lot of great episodes coming out this year, and y'all be on the lookout for some of the programs that
Yeah,
we're going to be launching. We have some new courses that we're going to be launching. We have a new membership program that's going to be coming out pretty soon. So you definitely don't want to miss out on some of those things. This is going to be something that's very limited.
yeah,
We're not letting too many people into this program, and this is to help and better everyone else that's here. So y'all definitely try to tap into that once all those details come out.
for sure. And I also want to tell y'all next week, y'all make sure y'all tap in. We doing Tax Talk Tuesday again.
Mm.
Last time we did it on IG Live, we got a lot of really good reception from it. We want to make sure that we getting y'all questions answered and putting it in a place where people can come back and reference it easier, like I mentioned at the beginning of this thing. So we're gonna be having Shaquana Brooks, Miss Business, our CPA.
Mm-hmm.
She knows business. She's gonna be on here. She's gonna be breaking down the tax gain, the tax loss. She's gonna be answering questions from people. So y'all definitely y'all turn y'all post notifications on. Y'all get ready for that next week. It's gonna be next Tuesday at 7 p.m. That's Tuesday, what it is, the 12th. Yeah,
Yeah,
Tuesday, January 12th at 7 p.m. Central Standard Time. We're gonna be back on this business. That's gonna be pressure.
it's gonna be
Also,
real fun.
y'all make sure y'all subscribe to our podcast, the Black Wealth Renaissance Podcast. If you haven't already, if you hadn't checked us out, man, make sure you tap in.
Yeah, we
We
on
drop new
Apple.
episodes weekly.
We on Apple. We on Spotify. We on Google Podcasts, Stitcher, wherever you listen to. Go look us up. Black Wealth Renaissance is the podcast. Black Wealth Renaissance on all platforms is just Black Wealth Renaissance. No underscores except for Twitter. Twitter is BWR underscore movement, but everything else is just Black Wealth Renaissance. Y'all definitely tap into what we got going on.
For sure. Uh, yeah, like my brother said, y'all tap in with us. We gonna be back next week with y'all. And on that note, this is David on behalf of Black Wealth Renaissance signing out. Peace.
Peace.
What made you click that?